Money has always been more than paper and metal. It is a story of trust, control, and power. Long before the US dollar existed, other currencies ruled the world. Civilizations from China to the Middle East to Europe created different systems of value. Each system reflected the power of its time. Human trade originally worked through barter, exchanging one good for another. But barter had many problems. What if you had wheat and needed iron, but the blacksmith needed wool instead? This limitation pushed societies toward a universal symbol of value. That symbol became money. The earliest forms of money were grain, livestock, shells, and precious metals. But as global trade expanded, metals like gold and silver became the international standard. Their rarity, durability, and divisibility turned them into a universal guarantee of wealth. For nearly 1,000 years, gold and silver coins dominated the world economy. The most powerful global currency of the medieval era was the Spanish silver real, later known as the Piece of Eight. It traveled aboard ships that connected Europe, Asia, Africa, and the Americas. Empires rose and fell, but whoever controlled the money supply controlled world trade. So when the United States was born in 1776, the founding of its own currency was not just economics, it was a declaration of sovereignty. America needed its own financial identity to survive among global empires. And that identity would slowly become the most powerful currency humanity has ever seen. After the American Revolution, the young nation struggled with debts and chaotic currencies. Each state printed its own money. Confidence was weak. Businesses hesitated. Foreign governments doubted the stability of this new republic. In 1792, the U.S. government passed the Coinage Act, creating America's official currency, the United States dollar. The name dollar came from the European thaler, a popular silver coin used widely in international trade. The act also established the U.S. Mint in Philadelphia and defined the dollar's value in terms of both silver and gold. This system became known as bimetallism. The promise was simple. Every dollar could be exchanged for a specific amount of precious metal at any time. That promise built trust. Trust built stability. Stability attracted business. The dollar was born into a world of gold and silver dominance, but the seeds of global power had been planted. Throughout the 19th century, the United States expanded westward, gaining natural resources, land, and population. Industrialization strengthened American productivity. The dollar grew alongside this young nation's confidence. Yet on the international stage, the U.S. remained small compared to the mighty British Empire and its global currency, the British pound sterling. At the time, the world still traded under the rules of European empires. But in the next century, the world would transform. Massive wars, collapsing powers, and economic revolutions would open the door for the U.S. dollar to rise above all others. The next challenge for the U.S. was not war or diplomacy. It was banks. In the 1800s, America had no central bank controlling the money supply. Private banks issued their own notes, sometimes without enough gold or silver backing. When banks failed, their money became worthless overnight. The result was repeated economic crisis and widespread panic. America needed stability. Debates raged for decades over who should control the nation's currency, the government or private bankers. Presidents came and went, but no perfect solution appeared. The nation switched between silver, gold, or both. Farmers demanded inflation to raise crop prices. Bankers demanded deflation to protect their wealth. Economic battles turned political. Political battles turned personal. Finally, in 1913, after a major financial crisis in 1907, the U.S. government created the Federal Reserve System, often simply called the Fed. For the first time, the United States had a central authority to regulate banks, support the economy, and manage the money supply. The dollar now had an institution powerful enough to defend it. But soon, the world would face a catastrophe that would shift the balance of global power forever. World War I. When World War I broke out in 1914, Europe was the center of global finance. London was the world's most trusted banking hub. The British pound commanded international respect. But war devoured money faster than any enemy. European nations drained their gold reserves to pay for weapons, soldiers, and supplies. They turned to the United States, a neutral emerging industrial giant, for loans and materials. American factories produced guns, ships, ammunition, food, fuel, and everything Europe needed to survive. Gold flowed into U.S. banks. Confidence in the U.S. economy soared. For the first time in history, the United States became a major global creditor. By the end of the war in 1918, Europe was buried in debt. America was rich in gold. Wall Street began to rival London as a financial center. The U.S. dollar was no longer just a national currency. It was becoming a global force. However, Europe still hoped to recover after the war. The British pound was wounded, not dead. The world would watch a new economic battle. Old empires struggling to rise again, while America stood waiting. But before this financial shift could settle, an economic disaster would shake the entire world, the Great Depression. In 1929, the U.S. stock market crashed, triggering a worldwide economic meltdown. Banks collapsed. Businesses failed. Millions lost their jobs. Trust in financial institutions evaporated. To restore confidence, President Franklin D. Roosevelt made a historic move. He removed gold from circulation among citizens and revalued gold in 1934, effectively making the U.S. government the primary holder of the nation's gold wealth. The message was powerful. The U.S. dollar would be protected, not by individual banks, but by the entire country. This shift strengthened the Federal Reserve and centralized control over the dollar. America became one of the world's largest holders of gold reserves at a time when global stability depended on gold. Just as the U.S. was recovering, another global tragedy erupted, World War II. And this time, the world would completely reorganize its financial system around the United States. When World War II erupted in 1939, Europe once again turned into a battlefield of destruction and desperation. The world needed weapons, food, machines, medicine, and only one country had the industrial strength to provide them in massive quantities: the United States. The U.S. initially remained neutral, but economic support began flowing to allied nations through programs like Lend-Lease, supplying billions of dollars worth of military aid. Payment came in gold, ship after ship, vault after vault, and U.S. gold reserves climbed to unprecedented levels. By 1944, the United States held nearly two-thirds of the world's gold. European economies were shattered. America transformed into the undisputed global economic leader. Money was no longer a European story. The financial center of the planet had crossed the Atlantic to New York and Washington. But as the war neared its end, leaders understood something. If there wasn't a new global economic system, the world could fall into chaos again. The solution was a historic conference held at a quiet resort in New Hampshire, Bretton Woods. In July 1944, delegates from 44 countries met to design a new world economy. Europe was broken. Asia was exhausted. The developing world was poor. Only the United States had the financial muscle to lead reconstruction. The nations made a monumental decision. The U.S. dollar would become the anchor of the worldwide currency system, backed by gold. Every other major currency would be pegged to the dollar, and the dollar would be pegged to gold at a fixed rate. $35 equals 1 ounce of gold. This created trust. Global trade could flourish with a stable value system. Countries could exchange dollars for gold whenever necessary. The world gained predictability, and the dollar gained responsibility. Two key global financial institutions were also created: International Monetary Fund, IMF, World Bank, both headquartered in Washington, D.C., signaling where global power truly lay. In that moment, the dollar didn't just rise. It became the center of the international economy. The British pound was replaced. The European currencies stepped aside. America became the banker of the world. But power always invites pressure, and the promises of Bretton Woods would soon be tested. After World War II, something extraordinary happened. A long period of global growth began. Cities rebuilt, industries expanded, international trade soared, and every major transaction used dollars. Japan rebuilt using U.S. loans. Europe recovered through the Marshall Plan, paid in dollars. Oil, steel, shipping, cars, all priced in dollars. As world trade grew, nations needed more dollars in their reserves. But the supply of gold in the U.S. was limited. The world was asking a critical question. If everyone holds dollars, are there enough gold reserves to back them all? For a while, the answer remained yes. The United States was wealthy and powerful beyond imagination. American culture, corporations, and currency spread around the globe. The dollar represented strength, prosperity, and global leadership. But below the surface, cracks were forming. By the mid-1960s, the U.S. was spending heavily. Huge military budgets for the Cold War, expensive involvement in Vietnam, social programs at home. The government printed more dollars to pay for everything. But gold reserves did not grow. Foreign countries noticed. Some began to doubt whether the U.S. could truly exchange dollars for gold at $35 per ounce. France made the boldest move under President Charles de Gaulle. They demanded gold instead of dollars. Ships crossed the ocean carrying French dollars to the U.S. and returned with tons of American gold. Other nations lined up next. The gold drain became dangerous. The world had reached a critical point. To save the dollar, something drastic had to happen. On August 15, 1971, U.S. President Richard Nixon made a stunning announcement. The United States would no longer allow dollars to be exchanged for gold. This decision closed the gold window and ended the Bretton Woods system. The dollar instantly transformed into fiat money, currency backed only by trust in the U.S. government, not by precious metal. Economists, politicians, and world leaders panicked. If the dollar was no longer tied to gold, would the world still accept it? Would other countries abandon it? Would global trade collapse? The answer came quickly. The world didn't run away. Because by 1971, the U.S. economy was too big, its military too strong, and global financial systems too dependent on the dollar. But America wasn't going to leave things uncertain. It was time to secure a new pillar of power for the dollar. That pillar was oil. In the early 1970s, the U.S. made a strategic alliance with Saudi Arabia, the world's largest oil producer, and later with OPEC, the global oil cartel. The agreement was simple but revolutionary. Oil would be sold only in U.S. dollars. Oil-producing nations would invest their profits back into U.S. financial markets. In return, the U.S. would protect the oil-rich kingdoms militarily. This created the petrodollar system. Because every country needs oil, every country now needed dollars. A powerful cycle was born. Nations buy oil. They need dollars. To get dollars, they trade with America, borrow from America, or invest in America. The money returns to the U.S. in the form of investments. The dollar remains king. Oil, the lifeblood of modern civilization, became the backing of the U.S. currency. Not gold, not silver, but energy. From that point forward, the dollar's power was unshakable, backed by the largest military alliances and the most essential resource on earth. By the late 20th century, the U.S. dollar had become more than a currency. It became the language of global trade. Ships crossing oceans, planes landing in major capitals, every container, every cargo deal, every major commodity, all priced in dollars. Whether a country was buying oil from the Middle East, electronics from Japan, machinery from Germany, wheat from the United States, the payment system relied on the same unit, U.S. dollars. Even rivals of America had no choice. If China wanted oil from Saudi Arabia, it needed dollars. If Russia wanted equipment from Europe, it needed dollars. If India wanted jet fuel, it needed dollars. This created a chain reaction. Countries stored huge reserves of dollars. Central banks invested in U.S. Treasury bonds. International corporations kept dollar accounts. The dollar became the default safe currency. Every global shock, war, pandemic, financial crisis, led to more demand for dollars, not less. Confidence built on confidence. Trade built on trust. Trust built on power. America's currency wasn't just useful, it became essential. As the world traded more in dollars, something else rose in influence: Wall Street. The U.S. financial system developed. The largest stock market, the deepest bond market, the most powerful investment banks, the fastest money technology systems, foreign companies listed on U.S. stock exchanges to gain access to investment capital. Governments worldwide borrowed money from U.S. markets. Corporations used dollar financing to expand globally. New York became the capital of global finance. If the dollar was the heart, Wall Street was the brain. U.S. bankers, investors, and regulators now had the ability to influence entire nations. Stock market crashes shook economies everywhere. Hedge funds and banks could move billions instantly. No empire in history, not Rome, not Britain, ever controlled global wealth with such efficiency. The economic map of the world tilted heavily toward the United States. But power this large is never quiet. It comes with conflict and consequences. As the world traded more in dollars, something else rose in influence: Wall Street. The U.S. financial system developed. The largest stock market, the deepest bond market, the most powerful investment banks, the fastest money technology systems, foreign companies listed on U.S. stock exchanges to gain access to investment capital. Governments worldwide borrowed money from U.S. markets. Corporations used dollar financing to expand globally. New York became the capital of global finance. If the dollar was the heart, Wall Street was the brain. U.S. bankers, investors, and regulators now had the ability to influence entire nations. Interest rates changed global borrowing costs. Stock market crashes shook economies everywhere. Hedge funds and banks could move billions instantly. No empire in history, not Rome, not Britain, ever controlled global wealth with such efficiency. The economic map of the world tilted heavily toward the United States. But power this large is never quiet. It comes with conflict and consequences. In the last 50 years, major shocks struck the world economy. 1970s oil crisis, 1987 Wall Street crash, 1997 Asian financial crisis, 2000 dot-com burst, 2008 global financial crisis, 2020 pandemic collapse. Each time, panic spread, markets sank, currencies fell. But every crisis produced the same result. Investors rush into the U.S. dollar, not away from it. Why? Because the dollar is seen as the safe haven currency, backed by the strongest military, issued by the largest economy, supported by the world's most trusted institutions. Even during the 2008 crisis, which started in America, the world still bought more U.S. dollars and U.S. bonds. The message was clear. The dollar could bend, shake, even stumble, but it would not break. And just as confidence seemed unshakable, a new challenger emerged. China's rapid economic rise changed the global power equation. Within decades, it became the world's largest manufacturing hub, the second largest economy, the biggest trading partner for over 100 nations. Naturally, China wanted a stronger role for its currency, the Chinese yuan, renminbi. Beijing launched major initiatives. Belt and Road Initiative. Trillions invested in Asia, Africa, Europe. Currency swap agreements to reduce dollar usage. Shanghai Oil Exchange pricing some oil in yuan. Digital yuan, CBDC, to expand international use. China aims for a world where the dollar is not the only option. But despite all progress, global trust in China's political system is limited. Capital controls restrict free flow of money. Investors prefer U.S. law and transparency. Most international trade still relies on dollars. The currency war is real, but the dollar remains far ahead. Still, another kind of money suddenly appeared. A wild, decentralized, digital rival. Bitcoin's creation in 2009 marked the birth of an entirely new form of money. No government controls it. No central bank prints it. No borders restrict it. Cryptocurrency supporters say fiat currencies like the dollar can be printed endlessly. Cryptos create financial freedom. Blockchain is trust without authority. Millions began putting savings into Bitcoin, Ethereum, stable coins, DeFi assets. The crypto market reached trillions of dollars in value. Even big U.S. corporations adopted crypto assets. Governments couldn't ignore it anymore. They started regulating, studying, and even creating their own digital currencies. But cryptocurrencies face major challenges. Huge price volatility, risk of hacks and scams, governments controlling exchanges, limited acceptance in global trade. Crypto is a fast-growing threat, but not yet a replacement. The bigger question remains, will anything ever dethrone the dollar?